Welcome to the JWK Show. Thank you for tuning in. Get your XRP and cryptos with the channel sponsor, crypto exchange BITUNIX. Link is in the description below. No KYC and no VPN. SEC and CFTC have defined digital asset taxonomy, and that is U.S. regulators introducing a new framework classifying digital assets into 5 categories, and that is digital commodities, stable coins, tokenized securities, NFTs, and digital tools. We have cryptocurrencies or anything on chain being classified under one of these categories. In total, 5 different categories, and we have the majority of cryptocurrencies, XRP, including 16 other currencies being classified as digital commodities, the SEC and CFTC giving the green light for the entire crypto market. And this means, unlike what we had with XRP being under attack by the previous SEC administration, XRP being delisted from the majority of cryptocurrency exchanges. This means, as of now, cryptos are safe and will remain trading on the majority of cryptocurrency exchanges out there, not going through what happened with XRP having a major crash to its price due to the SEC attack. And now we have the SEC and CFTC pushing America to be the crypto capital of the world. This was a massive announcement. And more breaking, in a submission on March 20th, Fidelity urged the SEC to fast-track crypto integration, pushing to bring crypto assets into already regulated U.S. trading platforms and infrastructure. In 2026, many banks are offering or soon to offering crypto trading, crypto custody, and many more. Eventually, the biggest TradFi trading platforms offering crypto trading, bringing mass adoption in for the cryptocurrency market, a lot of liquidity flowing into the crypto market, XRP. And we could see a double-digit market cap once that happened. From the president of Solana Institute, Christian Smith, lays out the timeline for the passage of the Clarity Act, warning the industry can't rely on a fall vote. Let's take a look at this from Crypto America Live.
So with all this in mind then, Kristen, what would be the timeline that you have for actual clarity to come through?
Well, so the Congress goes through the end of the year, I guess technically like January 3rd. And the big wild card is the Congress going to do anything in December? Because, you could very well have a final House vote on an identical bill or something in December. But the problem is that's not a guarantee. So you really want to scoot it up to the fall. Congress in midterm elections tends not to be around in Washington much during October. So there's that kind of September window there. That's a really tight window because that's when all the appropriations bills need to get done and they have to fund the government and everyone wants to get out of town. But again, there could be time for a vote there, but I don't think we want to have to depend on September. So that puts us into, we really need to get this through by the August recess. The Genius Act, that took about 4 weeks to get through the Senate floor. And this is,
August is the absolute latest for the Clarity Act to pass. If it doesn't, then we will most likely not get the Clarity Act due to midterms, making crypto political, and Democrats don't want Trump to win. If Trump is able to pass the Clarity Act before midterms or right as we have midterms, then it will increase the odds of Trump winning. And so Democrats will do whatever they can to not pass the Clarity Act. So a sense of urgency matters. We need to pass the Clarity Act ASAP. Hopefully, best case scenario, as Brad Gerlingow said, by April. And hopefully, we do get a signing even before May as well, as even August, I would say, is quite risky and decreases the odds of the Clarity Act passing. It gets very busy in August to September, and Congress isn't around in October. But at the end, everything is just a show. The 1% control everything. The question is, how will this movie play out? Logically, the big boys, the banks, don't lose. They own politicians. They own the markets. They simply own everything. if the banks really want to, then the Clarity Act will not pass. The fate of the Clarity Act is in the hands of the banks, but there is a loophole that crypto companies can take and to pay idle stablecoin interest reports in another way. Major update from the House Financial Services Committee set to host a hearing on tokenization and the future of capital markets next Wednesday on March 25th at 10 a.m. EST. Mark this date down on your calendar. We should be getting a ton of juicy information on the future of tokenization and capital markets coming on chain, which is what we call tokenization. And lastly, a congratulations from Treasury Secretary Scott Bessent to the Federal Reserve, USOCC, and FDIC on today's Basel capital proposal. We have Basel III key requirements, including holding a minimum 4.5% common equity tier 1 set ratio, a 2.5% capital conservation buffer, and 3% minimum leverage ratio and strict liquidity coverage ratios. And Ripple and XRP can assist banks in fulfilling these Basel III requirements by giving their balance sheets value, and with XRP becoming a tier 1 asset, these banks can hold XRP to fulfill the Basel III liquidity requirements. And why should banks care? Because Ripple plans to use XRP to solve their liquidity problems, and that is Nostro Vostro accounts. Ripple's big idea is to use XRP once its market cap gets high enough and it is being traded heavily enough to provide banks with liquidity on demand. The question is, how high of a market cap does XRP need to go to be considered enough for these banks to use for transactions? Is it 200 billion, 500 billion, 1 trillion, or is it more? So once we have XRP reaching a certain XRP price, it could be 10, 20, 30, and so on, that is when we will see banks officially using XRP for their financial services, for their transactions, for their business, and so on. Banks can hold Ripple's digital assets on their own balance sheet, freeing up a ton of space to hold other different assets. And when XRP is used, the model assumes that banks hold XRP on their balance sheets and provide their own liquidity for FX transactions. So instead of money sitting in accounts doing absolutely nothing to handle FX transactions, banks instead can use XRP, freeing up a ton of their own liquidity, their capital, and instead can be used for investing into other assets or other things, and also helps them fall under the Basel III requirements as they have even more liquidity available and to use. So XRP is a major help to these banks, especially as a form of liquidity, thus these banks mass adopting XRP. And it is very important for XRP to fall under Basel III requirements for these banks, institutions to be massively adopted by the 1%. That's it for the video. Hope you guys enjoyed, and I'll see you guys in the next one. XRP becoming a tier 1 asset just like gold.